Hello, everyone. I believe the market is going to have a bit of a pullback towards the end of the week, and that will maintain normal market structure. It needs to get slapped just a bit. If it doesn't happen tomorrow, it's going to happen towards Thursday and Friday. A lot to talk about. We're going to take a look at the SP500, the NASDAQ, the Russell, the dollar, the bonds, the VIX, the large tech stocks, all that good stuff. Without further ado, let's get started with the video. All right, so number one, according to forexfactory.com, Fed Powell is going to speak Wednesday before the market opens, and then he's also going to speak on Thursday at 2 p.m. So I believe that this is going to cause the market to get a bit of a pullback. If the fact that let me just go ahead and show you guys. Okay, guys, two things. We had 1, 2, 3, 4 gap ups in a row here on the SPY. You can't ignore that strength, okay? Granted, you can't ignore that strength. Fine. The other thing that you can't ignore is we've been monitoring how the dollar has an inverse relationship to the market. And with this bounce in the dollar here and returning back within the Bollinger Bands, that did not cause the SPY to fall. So we know that the dollar has an inverse relationship to the market. If the dollar is doing well, then that should mean that the market falls. That clearly did not happen today. So we bounced a bit on the dollar. The SPY remained up here. So what that's telling me is that there are extreme buyers in equities. And we clearly saw that towards the end of the day when we had that big pump. You know, we had a momentary drop to 433 twice, right? Towards the day. This is the 1 minute chart for the SPY. But then towards the end of the day, we had a bull flag and then another pop to the upside. So we cannot automatically just chalk this strength as like irrelevant. This is very, very relevant. The fact that this strength is maintaining itself. But regardless, this is not the time to start going long. This week, I am very, very certain that we will have a bit of a pullback today. Sorry, this week. And Fed Powell's speeches could be the catalysts for them. I'm pretty sure we're going to get a pullback by Wednesday or Thursday. If not, it has to be by Friday, because this is not a normal bullish structure. This is not a structure that can maintain itself in the SPY. So you guys can take that, you know, for whatever that is. And this is my that is my prediction. Okay, so first, go ahead and take a look at the large tech stocks, because let's see what the hell is holding this market up. Okay, Apple clearly doing really, really well. Apple had a very green, solid day today. We closed comfortably above this level of resistance at 176.64. Now we're trading right below 180. So we know that we don't like to go long at levels of resistance. 180 is a major level of resistance. Apple painted a very big green candle here on the daily here. All right, Amazon still trekking upwards. So Amazon still looks good here as well. Microsoft, absolutely. Microsoft is outside in space. It's not. It doesn't even want to come back to reality. And once again, it's important to denote that you cannot automatically go short on the upper level of the Bollinger Bands. It's much, 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 much easier to go long when we're opening and closing outside the lower level of the Bollinger Bands. But when we're getting extreme buying pressure, institutional level buying pressure, you cannot just blatantly try to short. That is a very, very bad habit. You're going to lose money because you're fighting against hedge funds and institutional bankers. So what you should do instead is take this as a sign, because all extreme strength cannot maintain itself either. So we had 1, 2, 3 days in a row where we're opening and closing outside of the upper level of the Bollinger Band. If this was the other way around and we were opening and closing outside the lower level of the Bollinger Band, you automatically already know what I would be doing. I'd be going long. I'd be scaling in. You guys already know the answer. So this is another major reason why we need to have a bit of a pullback, and a setup like this can lead to a big red candle. Nice solid big red candle. So I wouldn't be surprised if that ends up happening on Microsoft. So keep your eyes on that. And that will definitely affect the market as a whole. Google, it's continuing to come and fill this gap upwards, which is crazy. And we're seeing a lot of strength out of these names that were beaten down. So it's really interesting. So exactly what ended up happening, I was saying that we're going to get some love into Google, Tesla, and Apple. So we saw that Apple got some love. We saw that Google got some love. Let's see how Tesla did today. Tesla did not do as well as the other large tech stocks. So this is still holding above support, but it did not, a bit of a flat day, but it didn't have a monstrous green day like the others did. And now let's take a look at the chips. Nvidia came, it had a bit of a momentary drop to 450, and then we ended up closing right below the trend line. So this trend line on the daily chart is very, very important. We were monitoring it, and it's acted as support multiple times in history, all throughout here. And then recently, it also acted as support over here as well. So now we're back to this level on Nvidia, and it's currently acting as a level of resistance. So the level of resistance for tomorrow on Nvidia, according to the trend line, is going to be around 459.50. Okay, so that is going to be a very major level. This is a lot of strength on the chips. And let's take a look at AMD. AMD, you know, it's normal for a, like, just look at how much we pumped since October 26th. We pumped over 20% in a week on Nvidia, or on AMD. So a bit of a small little red candle is fine, but what we're going to need to see is the winners starting to lose out a bit, right? So what we're going to want to see, in my opinion, is the AMDs, Nvidias, and Apple start to pull back a bit. And then what I'm going to want to see, for this is for the bearish side, right? Then what I'm going to want to see is Tesla and the lagging stocks to continue to do weak. And this is going to cause the market to drop towards this in this week. I'm like, there's absolutely no way that we will continue having green candles on the market. I am I would be pretty shocked to see the amount of strength just continue. So I am expecting a break below 432, maybe even a retest to fill this gap within this week. Especially as more and more people become bullish here. This is just a really disgusting time to become bullish. Everyone would much rather want a pullback. So now this begs the question: if the majority of people are asking for a pullback, are we going to get one? The highest pain trade right now would be if we just continue skyrocketing and have no pullback, right? That would be the highest pain trade. But if you look at the damn chart, 4 gap ups in a row, still had a bit of a green day today. If tomorrow ends up being green and we end up retesting 437, 438, I'm going to buy into puts. Like, I am going to buy into maybe 2-week out puts. And I'm going to buy into 2-week out puts for a 10% stop loss. And then I'm going to do it again if we end up retesting 439, 440 area. And I'm just going to continue to take these swing trades short, in my opinion. I would be really shocked to see us just continue up, because this is not normal market structure. So the same way that I tell you guys not to go long, so the same way that I tell you guys not to go short at levels of support, right? This is the same concept. And once again, guys, the same concept is going to apply. When it seems most obvious to lean the bullish direction. So let me just make this clear. With this pullback, I'm not expecting us to randomly pull back all of its gains and make new lows. That's not what I'm talking about at all. My horizon for the next 3 months is bullish. I think that we're going to just continue up, and this strength is going to continue into the end of the year. That's my personal opinion based off of what we've been seeing these past few months. And but what I am saying is, in the short term during this week, we need to have a pullback because it is just not a profitable risk or reward opportunity to go long. If you have a target for 440, for example, you are basically 1-to-1 in terms of your risk. So your risk would be at around 430, 431, right? And your target would be at 440. Right now, the past 2 days, we've been trading at 435. So you have $5 risk and then a $5 target. That's a 1-to-1 risk reward. No one is going to trade that. And remember, the last time I was talking about risk rewards, we were scaling into longs down here, and we were also scaling into longs down here. The risk reward just was not there for bears. And right now, it's very similar. The risk reward is not there for bulls. So everyone that got long over here, comfortable, living life. But everyone, can you imagine? The thing is that now if you do go long, right? You guys are like, basically, if you guys go long, it is the equivalent of hoping that abnormal buying pressure continues. And you cannot trade based off of abnormal buying pressure. It's not a maintainable, tangible way of making money in the markets. If we do end up having a huge move to the upside, congratulations, but that is not a good trade to make. Okay, so keep that in mind. That's my thoughts. I'm not swinging. We're swinging. I mean, we're still holding on to the calls from a few weeks ago, which is fine. But heading into November, December, let's go ahead and take a look at seasonality. All right, so as you can see here, early November, which is basically where we're at, right? Early November, we get a big pump. Then what ends up happening is we get a pullback, right? And some choppiness. And then towards the third week of November, we get a bit more of a pullback because this move to the upside wouldn't sustain itself, which is completely normal. And then November and December, we get a major pump to the upside. So 75% of the time in November, we end up being green, which is really, really bullish. So, and then December, 70% of the time, we end up being green. So this is a really, really strong pair of months. Similar to April and May, we have 80% green and 75% green with April and May. We have 75 and 70 for November and December. So we can get a strong push to the upside. And it's also important to understand that Bitcoin is also starting to pump. And I think that Bitcoin might also be pumping because there's some clarity going on with the SPF case. But regardless, the fact that Bitcoin is also pumping is a good sign for the market. So, seasonality wise, we should be getting a pullback sometime either this week. I'm not even thinking about next week. Like this should be getting a bit of a pullback to this week. I'd be shocked if we don't, because I don't want people to just randomly begin to be aggressively short and buy weekly puts, etc., etc. I'm purely just trying to explain my thought process for a healthy market. In no way, shape, or form have we ever really seen a market that just continues to lift. So if we hit 437, that becomes a much better opportunity to short. If we hit 438, 439, 440, all of these are really, really good opportunities to short up here. So that's why, once again, a risk reward just isn't there for the longs. And I'd be shocked if we don't get a bit of a pullback, at least 1 or 2% down intraday on the SPY sometime this week. So I am not, if you want to swing anything, in my opinion, I'm not going to be swinging longs. I would rather, for short term, if you're swinging anything, I would not be swinging calls. I would be swinging some puts. And now, when we're taking a look at the Nasdaq's chart, You can see that the NASDAQ also closed right below a level of resistance here. The trend line level of resistance that we've been monitoring as well. And, you know, it's acted as support multiple times in history. So now, you know, we can see that it's acting as a level of resistance. So this level of resistance for tomorrow is going to be approximately like 369.70. So 369.70 is a major level of resistance for tomorrow. And yeah, you know, like, if the thing is that if we get a monstrous break to the upside and we comfortably break above the uptrend and this downtrend level, this, I mean, we already know that the buying pressure is there, but it is not going to sustain itself. So the higher and higher we end up making new highs, the more aggressive we're going to get a big move to the downside. So just keep that in mind. If the same strength that the market rises up with, we might end up getting a very strong pullback. So that's why for a healthy market, we need some sort of a pullback to maintain normal market structure. If we get a monstrous move to the upside, I'm expecting a much more heavy pullback. Whereas if we get a pullback now, it's not going to be as heavy. But if we get just sharp moves to the upside continuously for the next, you know, Tuesday, Wednesday, Thursday, that's going to be kind of worrisome. But towards the end of the week, I'm definitely going to be even more bearish. And just in general, like, I'm just going to continue just repeating myself. This is not a time to be bullish. So another thing is that the IWM, which was one of the main reasons why we were pumping on the SPY, and one of the main reasons why the SPY is trading above its trend line, is it was red today. So the IWM painted a red candle. It had resistance here at this major zone that I was showing you guys between 175.74 and 176.40, right? And we just couldn't break above that. So now we need to see if this 170 area is going to act as support on the IWM. Similar situation, IWM 170 equates to around 431 on the SPY. So we need to see if the IWM can go to 170, and then that weakness will most likely start to show some cracks in the SPY, because the NASDAQ stocks are also pretty overextended, Microsoft, etc. So unless the NASDAQ can hold the SPY up, okay, just think about it this way. Unless the NASDAQ can hold the SPY up, the IWM is already showing weakness. So with the IWM showing weakness, this should, even if it gives a bit of a bounce, etc., right, it should be showing some more weakness. Usually this weakness on the IWM would show in the SPY. Okay, so as the IWM is showing that weakness, it should be showing in the SPY as well. But the reason why it's not right now is because the NASDAQ is just in it's in the sky. So we're not trading based off the NASDAQ in La La Land. Okay, that is not a sustainable trading strategy. You cannot trade based off of you know, aggressive buyers continuing to buy day in and day out. That is not a sustainable trading strategy. So I would be very careful about I'd be very careful about over allocating yourself to a long side. Okay, there's that. I hope you guys you know, understood what I was trying to explain, right? Because with the dollar especially, we're not overextended now anymore. But this should continue and have another green day tomorrow. So if this has another green day tomorrow, since we just had an open outside of the lower bands, it's a very high likelihood chance that we are green tomorrow on the dollar as well. And since the dollar has an inverse relationship to the market, if the dollar has another green day tomorrow, that should cause the market to have a bit of a pullback. So unless, you know, the correlation is just not there for now, but if that is not there, then what's going to end up happening is we have to have a bit of a pullback based off of Powell's speech, one of his speeches. And that is definitely going to occur, most likely. I would be shocked if it doesn't. All right, so I hope you guys enjoyed. I sort of you know, I had a lot to say, so I hope what I was saying made sense to you guys. And also you know, I live traded again today as well after a few weeks. That worked out really, really well. I'm glad that so many of you guys are tuning in, and I'm glad that, you know, things are still working out. So regardless of what happens day to day, we're still making money going live, and of course we're still making money on Wave and just taking the trades. All right, so yeah, man, this is you gotta admit, this is some crazy bullish price action. And normally, right, any other time, guys, like a few weeks ago, this would be an amazing opportunity to go short without even any question. We would have a major pullback already. But it just goes to show this is just an extreme amount of buyers from the institutional side. So it's pretty crazy, to be honest. And yeah, you know, I'm just in awe sometimes in the market. And it's a blessing, because this experience that we have watching the market do what it does, wow, that was, what a sentence. Watching the market do what it does during times like this, we can apply this to things in the future. And that's, you know, day-to-day experience is the only thing that solves that sort of stuff. So I love it. I love watching the market do crazy things like this, because it gives us a chance to analyze. So yeah, based off of my analysis, I'm thinking that we're going to have a pullback towards the end of the week, if not tomorrow. So yeah, you know, if we get another move to the upside, if we get an aggressive move to the upside tomorrow, if somehow the futures are green either Tuesday or Wednesday, okay, let me just make this clear. Like, we just say this: if by Wednesday the market is trading above 437, if Wednesday open the market is trading above 437, I am almost guaranteed going to buy 2 week out at the money puts on the SPY. Okay, there. That's what I have to say. All right, so I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff, and I will see you guys bright and early tomorrow morning. Thank you.